All right, good afternoon, YouTube. This is Mark checking in here for another edition of our midday futures update, coming at you guys from Toronto, Ontario here, our TPA headquarters on this lovely day of May the 15th, Wednesday, May the 15th, 2019. I'm finally seeing some nice weather here in Toronto, starting to feel like spring, so office is in a good mood today. And let's get at this report. So first things first, we're going to take a quick look at some of the news drivers for today's session. As Georgie covered in the morning update, we saw core sales and retail sales month-over-month figures coming out of the States, both of which came in at a bit of a miss, 0.1% for core retail sales versus 0.7% expected, and minus 0.2% month-over-month versus 0.2% expected. So a bit of red on that front. We also saw the Empire State Manufacturing Index came in at 17.8 versus 8.2. A couple of other reports came out today, low impact, nothing really there to look at. We've got the NAHB Housing Market Index came in at 66 versus 64, and we had business inventories month-over-month figures come in at 0%. Versus 0% expected. As far as what we've got planned for the remainder of the session, I just see at 4 p.m. we have TIC long-term purchases. It's a low impact event, so don't expect too much volatility on the back of that. What we did see today, however, was a bit of a tape bomb coming out from Mr. Trump, reportedly planning to delay auto import tariffs for up to 6 months. And we saw the S&P 500 take a nice bid off of that, rather catch a nice bid off of that, and we are continuing to press new session highs, currently trading above the previous day high here, around the 54 quarters. So that's all that we had there. Just taking a quick peek if I missed anything. No, we did not. Perfect. And really outside of that tape bomb, we had a crude inventory report. Favorite days on Wednesdays to trade crude oil, and we like to trade on the back of this report. Report itself came in pretty bearish, but I'll kind of explain the discrepancy here, why we got a little bit of a bid on the back of crude, which is as a result of our weekly API oil inventories that came out yesterday. Crude had a build of 8.6 million versus 2.8 million prior. And today's release showed a build of 5.4 million versus an expected draw of minus 1.5 million barrels. So even though this is bearish, it's a bearish report, because the API numbers came out yesterday with a bigger build. We saw a lesser build here on the EIA report. So even though it's bearish, it's still being interpreted here as a bit more bullish, as there's less of a build than we saw on the API numbers. As far as the other two figures, gasoline and distillates, gasoline came in a bit bearish as well, 0.6 million barrel build versus minus 0.5 million expected draw, and distillates came in at plus 0.1 million versus minus 0.5 million. So build across the board. However, on crude, the build came in less than what we saw on the API inventory. So we're seeing a bit of a rally on the back of that front, as crude is also pressing its session highs here around the 62.30s. So now that we've covered the news events, we're gonna go into our quote board and take a look at the charts. One thing I will mention before we get back into the charts is just reiterating the fact that having a new squawk is of super key importance today. We were able to stay on the right side of the market once that tape bomb hit as a result of having the squawk, and our members stayed on the right side as well. So if you are a day trader, you're day trading these markets, crude oil, S&P 500, really any of the equity future indices or equity indice futures, you need that squawk, because reasons like this, especially with the China-US trade war heating up, and quite a light economic schedule as far as it relates to those economic releases, these tape bombs are really what can drive the market. So any of those tweets, any of those headline risks coming in, that will come through the squawk. And really, unless you got a real-time squawk, you're going to be wondering what the heck happened as the market's ripping away from your entries. So that is the benefit of having a squawk. I've been saying it for the last 2 weeks, and today, and for the last couple of days, you're also seeing the real value behind having one of those on your trade station. So with that being said, let's jump off to the charts here and let's take a quick peek at what our markets are doing. Got the quote board up in front of you right now, just grabbing my little pen tool and let's get started. So the tab highlighted right now, those are your S&P 500 futures. We've traded 1.18 million contracts so far on the session, and we are daily change percentage is up 0.63%. Previous day close came in right around this black line here. That was 28.41. So trading above previous day's close. And crude oil as well, we've got around 550,000 contracts traded thus far today. Daily change percentage is up 0.7%. Previous day close on crude came in at 61.31. We're currently trading almost $1 higher at 62.22. So both of these markets are showing bullish today based on those daily change percentages. As far as volumes, SPU's higher than average volume, again around 750 to 8 is your average volume over the last week or so. We're seeing around 1.2 so far in the session. Crude oil is just about on average anywhere from 450 to 550 around this time of day is what you're seeing, and that's pretty much what we've gotten in there. So liquidity is looking pretty good on both sides. A little bit more liquidity in the S&P 500. So now that we've got that, we can see liquidity is good. We are biased towards a bullish end based on the daily change percentage, seeing what we've got. Let's take a quick peek at our pivots, and then we'll jump into the range bar charts, get you guys some key levels to watch out for as we trade into the end of today's session. So let me get my pen again. On the left-hand side here, you've got crude oil futures. This is your 1 hour bar charts. And what you're seeing here is a rotation back really off of the S1. This was overnight. So overnight, we kind of ranged between that pivot and the S1. You can see we pressed up into that pivot 61.51, pressed down into the S1 at 60.92. Right, this was around probably around 5 a.m., 6 a.m. I have to expand this a little bit here, see what time that was. Yeah, so that came in around 6:15. So 2 or 3 hours before the New York pit open. And what we are seeing now is a break above that pivot level. We are currently at the R1. So we're kind of consolidating here. Usually what happens after consolidations is a breakout. This time it happened to the upside. R1 is currently acting as resistance right around those 62.34s. You can see we traded up in there, held that level as resistance once, and on this current hour bar, we are forming a potential resistance as well. So if we close here, again, this is 8 minutes into the hourly session. So at 1 p.m., if we close back below that R1, could look for another press back down into those pivots. However, if we stay up here and we're seeing buyers absorbing this rotation off of the R1, we could see another potential press up into that, and maybe even up into the R2s. R2s coming in around the 62.93s. So right around that 63 target, rather 63 will be the target if we can press back up above the R1. So that's what we've got on crude. As far as the SPUs are concerned, kind of seeing what we were mentioning in yesterday's update, the fact that we were seeing lower lows and lower highs on the SPUs, and that we were looking for really that 28.50 level to be a potential line in the sand for those sellers, as what we were seeing here, at least on the 1 hour bar chart, was a bit of a channel kind of forming. And excuse me, at the time I was saying we got a bit of a channel, we got some previous support, should turn into resistance, and we had the R1. You can see the SPUs came up into that level, and we got a nice rotation off of it from the 28.50s down around those 28, we'll call it 28.10s, or what did this come down? Overnight low is 28.15, so 28.15s. So nice 30 point move rather off of that level. And we came into those 14s, and now we are driving back higher, back above that previous high around those 50s. And this is really a key level for the bulls to press above if we're going to continue on back into that major 2,900 round number. You can see that is kind of where that gap happened. So if we can get back above that level, I think we'll make a accelerated attempt to close out that gap from Sunday. Still hasn't been closed, and that gap sits at 28.88. And so if we do get back up above this R1 today, I think we can make a press towards that level into the latter end of the session, latter end of the week. So that's what we'll be watching for on our side here. Let's take a look at the oil chart, have a quick peek at what price is doing, and let's see if we can get you guys some nice levels to keep an eye on. So what you're seeing here is pit open was down right around the 61.05s. Got a bit of a bid into the EIA report. Once the report came out, we saw a bit of a press higher, and we've been looking to buy rotations lower here, buying the dips. That's been kind of the strategy on today's session. You're seeing it's been working out quite nicely. Now that we're back above that previous day high, you can see this was 1, 2, 3 nice resistance level here. This was 14. So yesterday we had this nice resistance. Now we've popped our heads above it. Crude is trying to find some support in that zone, but ultimately what I'm looking for, not really looking to pick anything up here. If I am looking to pick something up long, it'll likely be around these 61.80s, right around this level. Why is that? Well, because you've got your 5-day volume profile here, nice high volume node here on the 5-day volume profile as well. You have got your pit VWAP, you've got your Globex VWAP pressing higher as well. You've got your overnight high just a bit below around the 61.60s. So really anywhere in this zone, if we can pull back, start finding some support, could look to pick this thing up for another press into those previous day highs and potentially the next zone above around those 62.50s. As I mentioned, bit of space here. You can see there's a little low volume node. So if we can get back up above that zone, could get a quick press up into those 62.80s and potentially those 63s right up around those previous highs. So that's really the level we'll be watching for, 61.80s to 61.70s as support and 62.40s to 62.50s as resistance really for the rest of this session. As far as the SPOOs are concerned, seeing some similar price action here in the sense that we had a nice previous high that has held quite well. This was on the 14th. So yesterday's session came up into those 54 quarters once, tried it twice, were unable to break above. And you can see that sell-off from that level ultimately led us to our overnight lows at the 28.15. So on today's session, we opened up at the 17 quarters, caught a nice bid off the start of the session, and we've been pressing higher, essentially erasing any of those gains the bears made overnight. And we're currently back to where that started, back in that previous day high. So looking bullish at the moment. As I said here, we've popped above, peaked our head above that previous day high and starting to form some rotations down in here. First level of support would be really right up here, right around these 52, 53s, previous consolidation level, breakout, rotation, find some support, could look for a press higher, as that's kind of been the trend so far today. You can see it's been quite an aggressive trend as well. So channel, kind of a channel support, if you will. We don't really use those too often here in the futures day trading, but giving you a basic idea of where we're going. So if it holds that level and then we find a press higher, could look to get back on the long side. What I'm seeing here though is if we get a press lower and we fail to break here, could see something like this again, where we had that move up, rotation, another rotation up, seller step in, press this thing back lower. So that's ultimately what we'll be watching for here. Now that we've got some buyers stepped in on that breakout, looking to see how far that rotation goes lower. Could look to pick someone up here at your overnight high. This is also your 5-day volume profile value area high as well. So looks like we've gone above that value and see if we can come back in, build up some value up higher here for another press up. So that's what we'll be watching for. First support can come in around the 52s. However, more preferred is around that overnight high to that 5-day value area high as well, between those 48 halves to, let's call it, the 47 halves. So that'll be your levels for today. If we do get kind of an extended move into here and we do see that failure, might see that press back down into those 28.37s. Our VWAPs are kind of hanging around there, so that could be a potential level that the market trades into. But at the moment, long is the right side. Trend is bullish. higher lows, higher highs. Look for that trend to continue. As I said, could look for a move back up into this zone, find some support, pick this thing up for a ride higher. And that is all that we've got for you guys for the future update today. One last order of business is to get the TRADEPRO Performance Index. So just grab that for you guys here. Make sure I've got everything nice, nice and ready. Give me one moment. All right, and here we are. Hide the columns and transfer it over. Lovely. So what you guys see in front of you is our team's results for today's session. Oh, is that the results? Yeah, those are the results for today's session. We got to shift these over since we did not capture the weekend. However, this is for the 15th. Today we had almost 61% green, 4.5%, or just a bit over 4.5 flat, 34% were down, giving us overall total of 65% of the room having been green on today's session when we signed off around 11:30. So again, trend is continuing bullish. We're about halfway through May at the moment. Our average in the room is around 65%, which is just about where it's been since we started tracking these numbers. And this is showing you guys that our members are also killing it in these markets. Whether it's up, down, or sideways, they know what to do. We're right along them. We're right along with them in the trenches, doing this every single day. And this is one of the benefits of being part of the room. So we'll be trading into the latter half of today's session. Just make sure to follow those 3 rules. Remain patient, remain diligent, and remain disciplined. Until tomorrow morning, or rather until tomorrow afternoon, wish you guys good luck and good trading. This is Mark again, signing out from TRADEPRO headquarters here in Toronto, Ontario. Have a good one, guys. Take care.